GETCRACK. Wake up, motherfucker.
Feel like I should, feel like I should, feel like I should, feel like I should go. Go. Feel like I should go. Feel like I should, feel like I should, feel like I should, feel like I should go. Feel like I should go. Feel like I should, feel like I should, feel like I should, feel like I should.
Results are out. Stocks popping 9-10%. Frank Holland has those results ready. Frank?
Well, hey there, John. Miss on the top line, but a beat on the bottom line. The estimate for EPS was $3.91, came in at $4.05. But the real story is that FedEx has confirmed, it was long speculated, they will spin off their less than truckload trucking business, FedEx Freight. The idea here is to unlock shareholder value. We're just talking about this on Closing Bell a short time ago. FedEx overall as a company trades at about 12 times forward earnings, and that includes its freight business, again, an LTL trucking business with about $9 billion in annual revenues. If you look at their peers, names like Old Dominion and also XPO, they move less freight and trade at a significantly higher multiple, both in the 30s. So really, this is about unlocking shareholder value. In a release, CEO Raj Subramanian says this process will take about 18 months. It's going to be executed over the next 18 months. He goes on to talk about the fact that he believes that they're going to be able to continue, even with this separation and spin off into a separate company, the cooperation between FedEx Freight and also their ground and their express business. Earlier this year, they combined the ground and express business into one unit, combining it, kind of breaking decades of tradition and FedEx keeping them separate. Now he's saying that along with this spin, that they're going to still be able to cooperate. That was one question from a lot of investors and analysts, whether or not FedEx Freight and the other part of FedEx, the remaining part of FedEx, if you will continue to work together. FedEx often wins business by bundling their trucking services along with other freight services through ground and express. They're able to win business, but they also charge less than many of the other peers, both on the e-commerce side and also on the LTL side, the trucking side. So again, shares of FedEx moving double digits higher, miss on the top line, a beat on the bottom line. But the real news here is that FedEx will officially spin off its freight division. That process is expected to happen over the next 18 months. And CEO Raj Subramanian is going to be on Mad Money with our Jim Cramer later at 6 o'clock to talk about this separation of the trucking unit into a separate public company. FedEx miss on top line, beat on bottom line. But again, John, the real news here, the spinoff of FedEx Freight. Back over to you.
All right, Frank Holland, thank you. Yeah, a lot of spinning going on out there. Barb, both you and Seth have been saying that should buy the dip. Consumer spending, jobs and wages are solid. But today, the S&P is just below where it closed the day after the election, I believe. How much has your level of confidence in the strength of equity shifted, if at all, since the post-election rally started?
It hasn't shifted at all. I mean, we've seen in this last month in December, a lot of laggards in terms of all the cyclicals, the economically sensitive stocks have given back a lot. There was a lot of euphoria after the election in terms of deregulation and tax cutting and what that would mean for the economy. But and at the same time, you saw the mega cap tech, as always, taking the lead and running forward. Yesterday was about, getting rid of momentum traders, trend followers, and taking profits yet again in the mega caps. So I think the bull market is still very much intact. I think that you can just take your time in terms of picking here and picking there, although I was in buying today, had some new cash to put to work in all my favorite names because it's hard to pick the bottom. And I think the bottom downside is protected because of the strong economy and the earnings will out. So it has not shaken my faith at all in this market. And I think this is part of modern day portfolio management and trading is these swift downdrafts that can amount to nothing more than a buying opportunity at the moment.
Okay.
gave a weak sales forecast for this quarter. They cited lackluster demand from makers of phones and PCs, the two consumer-oriented markets that use their products the most. The company added that they, quote, anticipate a return to growth in the second half of our fiscal year. Now, analysts say they see that fueled by the future of artificial intelligence.
The memory market at the moment is extremely polarized. On one hand of the market, you have AI infrastructure that is consuming as much memory as it can. That part of the market is doing incredibly well.
Micron did confirm they are seeing strong orders for components used in AI. The company received more than $6 billion in funding under the CHIPS and Science Act. That money was awarded just last week with the goal of creating domestic manufacturing jobs. The U.S. has an ongoing goal of shoring up domestic AI and chip production like this to compete with China. Even this week's stopgap measure from Congress that's meant to keep the government open includes a provision that would further restrict U.S. investment in some Chinese tech sectors lawmakers say could threaten national security. One of those sectors is what's known as foundational chips, older models of semiconductors that are in many everyday items that we use. Bloomberg News is reporting the Biden administration is set to launch a trade investigation into this industry in the coming days. It could result in new tariffs under the next administration. Kayleigh, you spoke with Joe Livornia, the former chief economist under the first Trump administration, who broadly defended any of Trump's tariff threats.
I see President-elect Trump's policies as expanding the supply side of the economy. Its potential, productivity, basically, its ability to produce the things that we want. And this is a negotiation. Tariffs will be a very powerful and important tool that will be used. I just think it's incorrect to look at them as being inflationary.
It does go both ways. Last week, a regulator in China launched an antitrust probe into U.S. chip maker NVIDIA. Kayleigh, these are just the latest escalations that we're seeing in this ongoing competition for chips and artificial intelligence.
And Tyler, just quickly, as we consider tariffs on China in particular, this is tariffs that came up in the Fed's press conference today with Chairman Powell.
Right, of course. So I was actually there at the Federal Reserve earlier today when that FOMC decision came down, and Powell was asked about potential inflationary impacts from the tariffs that some economists are predicting. And he said it's too soon to know since we don't know the exact specifics of Trump's economic policies that are coming through, but that the committee is starting to think through some potential scenarios. He did say, though, a line that we hear often, that they are not going to rush through this and they're going to be cautious.
To me, what it is about these results that are so disappointing when there was so much optimism built in about the high bandwidth memory products. It turns out it's the legacy business and the numbers related to that is accounting for the big drop today.
Yes, exactly. I think the memory market at the moment is extremely polarized. On one hand of the market, you have AI infrastructure that is consuming as much memory as it can in a very specific, very leading-edge form factor, the HBM, the high bandwidth memory you refer to. And that part of the market is doing incredibly well. And data center demand represents more than half the DRAM market today. And growth there is very strong and is only going to strengthen next year. Mm-hmm. On the side of that, you have traditional markets, which are the PC market, the smartphone market, that have gone through a very unusual pattern in which you've had a very, very strong cycle of inventory correction in the last 18 months, we'll even say in the last 24 months. We came out of this inventory correction last summer, but end demand, consumer demand for smartphone and PC, went well below what the market was expecting. Mm-hmm. You remember that smartphone manufacturers, PC manufacturers were like, AI is going to drive a refresh cycle. Mm-hmm. People will want to buy AI PCs. This is not happening. And that's creating a second air pocket in these markets. But it's a short one because a big inventory correction has happened already. And we are going through a second, very, very shallow inventory correction. And in memory, as soon as you have too much chips to sell, your margins are under pressure and you can miss fairly significantly this quarter, $1 billion is a lot.
So I know we haven't had the call yet or anything that you've seen, but it seemed like in the last quarter, they felt much more positive about those consumer electronics. Do we believe their forecast that the back half of their fiscal year now will really finally see that turnaround?
Yes, I agree with you. The quarter is very disappointing, like the guided quarter they give compared to what they said 3 months ago. So I think management probably was betting on stronger consumer demand, stronger end demand than what we saw. And so the direct read across of that is that consumer demand for PCs and smartphones is probably not improving at all. And on the contrary, it could be still disappointing. Now, there is so much a market like smartphones and PC can come down. We are already 10% below the levels of 2022.
Yeah.
Which means that we're going to have 1 or 2 quarters of very weak demand in this market, but then inventories will be flushed and things will have to come back to normal. So it's a very temporary weakness, yes.
So is there no hope, Pierre, that we do see maybe the data center business pick up a little slack? I mean, I was going through the numbers on the Bloomberg terminal. This appears to be the first quarter that I can recall where data center revenue actually made up more than 50% of sales. Is that not a silver lining?
This is definitely a silver lining, and we are actually very, very optimistic about that, Romain. Now, in memory, remember that when you manage your fab, you make a decision, and then the lead time for the manufacturing process to go across is like 4 to 6 months. So the problem is that today you have too many chips for smartphones and PCs and not enough chips for data centers. And they are very similar chips, but slightly different. And so manufacturers cannot use the extra demand from AI to absorb just now the excess capacity on the smartphone and PC side. It takes 6 months to make these adjustments. So 6 months out, you're 100% right. Next 6 months, we'll have to go through a bit of pain. We'll have to go through a bit of pain on margins and on volumes because of that.
It is December 22nd, 2024. Okay. So we're going to get into the couple weeks left in the trading year, and it's going to be very light. Shouldn't be anything exciting. There are no earnings of any importance. Everyone's on vacation by now, so don't worry about it. We'll see what the trend is tomorrow, but I assume it'll continue the way it did on Friday and move all the way back up into New Year's. And I did make a mistake saying that there was going to be unemployment data on the 3rd of January. No, actually, apparently, I keep forgetting this. So January, usually what happens is that if most of the week is going to be in the vacation mode, so New Year's is towards like the end, like mostly, so it's Wednesday this year, so then it's going to be near towards the end. Yeah, the government workers aren't back at work yet, so everything's going to be delayed a week. So you got an extra week. So it'll be the 10th of January. You'll get that first piece of data that the Fed is looking for. So if everything goes well, we can pump all the way until the 10th. So it could just be a straight line, all right? And for the S&P, it'll probably just try to recover what it lost on Wednesday. So this should be an easy trade back up. And then from there on, be afraid. Be afraid, because maybe the unemployment is good and it'll keep going for another week, one more extra week, and it can make a new high, or it's not, and unemployment will show there's problems, something that, I mean, I don't know what the market is expecting. If the unemployment is weak, maybe that's good news now, because the Fed is more concerned with a strong economy and too much inflation with all the stimulus that's going to happen, rather than worry about, because there's going to be fiscal stimulus. Okay. So there's not going to be, so there's two engines that control, that the government can push the economy towards, using fiscal policy, which is what the president can do through the Treasury Department. And then you have the monetary policy, which is an independent organization run by the Federal Reserve, a central bank. Okay. Now, I believe China doesn't work that way. I think China pretty much is under the thumb of the Communist Party, right? So I think realistically, China yeah, they the government controls both sides. There's no sense of independence at all, right? So, of course, if you believe there's independence anyway, if you're really more conspiracy minded, then yeah, there's other factors that go into these things. But I'm not going to get into that. Anyhow, let's look at how the things are going. So on Friday, I bought SMCX, so the leverage of SMCI, the 2x leverage. Okay, so let me get the chart up, and then we'll see what we can trade. The other thing I want to talk about is natural gas. So I made a mistake like for a couple weeks here, saying that UNG, right? That's not gasoline. That's natural gas. So my bad. Like usually I use boil. Okay, that's what I use for natural gas, but I thought UNG was gasoline, but it's actually just natural gas anyway. It's a weaker version of boil. Boil's slightly more juiced than UNG, and so if you want gasoline, it's UGA. Okay, so on Fridays, I corrected myself on this. So I'm just watching gasoline right now, see if there's any play to be made for the January move up, Christmas into January. But no, I haven't seen any kind of triggers right now because oil has been very weak so far. So there's no motion in oil. All the EIA reports haven't been very good. EIA, the energy report that's released by the government every Wednesday for oil, gasoline, and diesel. Now, so far, let's see, natural gas, get back to natural gas here. So far, we've broken out. So we tested this area here. So I shorted natural gas twice over here, back in before Thanksgiving, then just after Thanksgiving. Then I just waited to see if this thing was going to move back up. Now it's broken out. I mean, yes, this would have been a nice long, if you went that way. But what I'm really waiting for is to see if this thing just slams right back through here. So $3.4 per million BTUs, British thermal units. See if it goes through here. Now this is just a spot price. The futures price, I believe, let's see, has to go through 3.5, around 3.5. Okay, if I see this thing go below $3.5 per million, yeah, then what I'll use is I'll use coal again. I'll use coal to short it. So right now coal is at $51. And the reason why I'm showing you this is because here, I'll show you what the cycles say. Right now, here's the latest analysis with the cycles. So this is the trade I'm willing to make. But natural gas might be very strong right now, but seasonally it should go back down. But if the weather isn't too mild for this winter, for the January and February months, then yeah, it might just go sideways, which makes me even more bullish about natural gas for the summer. So what I plan to do is just buy natural gas the boil. So be bullish on it using the BOIL ETF boil and push it up into. Oh yeah, I shared the wrong thing. Yeah, push it up into summer. So I think that's when we're gonna get a big move, and then the next big move will be winter. So I think second half of 2025 should be very good for energy companies. So not only for natural gas, but energy companies, because I think that's when crude oil will start warming up too. So crude oil, I'm still waiting for coal to warm up. Right now, coal is still weak. So that's going to be dependent on China. And then if Trump's going to force Europe to buy liquefied natural gas from us to avoid getting tariffs, then yeah, that's a natural uplift on the energy complex for the United States. So here's what the cycle looks like right now. You see this? So we're at the last top here for the year, it looks like. And this is not guaranteed. It doesn't mean anything. Even though you see this pink line going down, it doesn't mean that it has to go down. It just means that it's unlikely to continue up. Right? It could just go sideways until April and then go up into the summer. Okay, that's a possibility. But usually, yeah, it will just start dropping like here, like late. So anytime late in the year into the January winter month, then that, yeah, you'll see a weakness in natural gas. So that's just a natural phenomenon of how it goes. So yeah, look at cold, KOLD ETF. So you can look at that. So UGA is the gasoline one. I haven't seen anything to suggest I would buy it right now. Gasoline ETF. And cold is the bear natural gas ETF. Okay. Right there. Okay. Let's put it in the chat for you guys. Now, let's see what other things to talk about. Oh, Bitcoin. Yeah, Bitcoin. Here, hold on. And I'm using the foundation of the study of cycles software to do that stuff. So, man, let me give you the link for that stuff if you want to understand these things further yourself. So this is a Bitcoin one, and here I just use one cycle. I just use the 200-day cycle. So we're on the fourth cycle right now, and there's usually a cycle pattern. Okay, 5-cycle pattern. And then it'll reset again. So the next one will be around May to maybe August. So maybe July. Maybe that's where the last high will be for Bitcoin. But right now we're on the fourth cycle. So I'm waiting for this to drop. I think we are going to drop within a week or two. Maybe it'll follow the stock market. But yeah, after that, be warned. Be warned. So if you're on the altcoins, you got to be really careful to see if they can hold. They've been weakening pretty badly last week. So they got walloped, right, by Jerome Powell. Jerome Powell did not give the green light. So I don't know if you want to gamble on that after the first couple weeks in January, because that's about it. I think maybe that's the end. That's the end for what you're gonna get here. Okay. So spectrum down at the bottom. There's all these little spectra here. You can look it up in the foundation of study cycles. Let me get that for you. Okay. Foundation of the study of cycles. So it's like cycles.org. Okay. And don't take this as gospel, right? It's like it doesn't have to be exactly the truth. Okay. It's not gonna be exactly the truth, but it is a guideline. It is a guideline. I mean, you can see here. You see this? So the 2024. So this was when I played it last on the Bitcoin run, was between the 2023 to 2024 era. So around October 2024 and all the way into January, February. And you could have waited probably maybe into March even for some of those things. But you can see that once it reached its peak here and it went down, the pink line, the magenta line, whatever, it just went sideways pretty much until we hit the bottom again around September, you see? So right when you have the bottom of this sine wave, that was the bottom of Bitcoin. So that was when you got in before like the elections and whatever. And it's just a cycle thing. It didn't matter too much who won the presidency. I mean, if Trump didn't win, the move up probably would have been weaker. That's it. It would have still moved up, but things would have been weaker. Same with the stock market. It would have moved up, but the magnitude would have been smaller. Because all cycles does is just tells you, okay, this is probably the best time to see and expect a move up. But otherwise, yeah, expect weakness, move down or sideways. Don't really know. But yeah, you can't guarantee that'll have an easy time to go up. There's pressure building where it has to consolidate. And we could be in that time where Bitcoin goes nowhere until May. So don't expect anything from the altcoins either, unless when Trump gets in, there's a lot of new enthusiasm for ETFs, the new SEC chair. So I think a lot of the altcoin stuff is going to heavily depend on the new administration, how quickly the SEC will foster growth in altcoin ETFs, altcoin like adoption and other things. Because otherwise, they're just going to say Bitcoin, Bitcoin, Bitcoin. We already got that news. Everybody knows. Yes, the United States wants reserves. That's what we got last week. That's what we had that last high to 108. That was it. After that, it dropped. Okay. So the news is already out. Everybody knows the news. Is there any new news? That's the question. So otherwise, can't do anything because Powell just threw a grenade into the whole system and said, nope, we care about inflation. So that kind of hurts everything. And look at gold, right? Same thing. That's why I said stay away from gold and silver and all that, because you already had your move a couple months ago. You already got that last move up, and now it's totally dependent on China at this point. So if you want to see silver and gold move up, then China's economy has to boom, and then the whole commodity complex goes up. So everything moves up in cycles. There's some months where something is going to be leading, and then there's some months where something's lagging, and you got to keep going around and rebalance, move from this place, go over here to the other place, right? You could have been in Tesla in December. Tesla's probably been the best performing large cap in the tech space for December, right? And then in November, you could have been in something like Google, right? So that would have been where you should have been. So a lot of stuff like that like happens continuously. And maybe nowadays with all like the rapid trading and people watching the news all the time and going on their phones, this kind of effect is getting even worse. Okay, so got the Bitcoin up. Let's see what else. MSTR, yeah. So I went long. Here. This is where I went long Thursday at the close. I got in some. Then Friday in the morning, I got in some. Then it pumped in the like pretty rapidly within the first hour. So towards the end of the day, I sold some. I kept some. I want to see if this thing retests this 356 area again, and then try to go for 383 before Christmas. And then if you're lucky, maybe after Christmas, it'll head to 405 and 416. So I use the leveraged ETF MSTX. MSTX is 2x. So that whole morning, yeah, if you played it from Thursday and Friday morning, and if you were crazy enough to go pre-market, you could have made a lot more, but that was like 15% just within the hour of the morning. And then you could have got more up here if you waited till the end and then sold. Now we're up, okay? Now we're up, and we're going to see where we're going to go. Now, I told you guys on Friday, you know, what I should have did is when I was trading from here to here to here, man, I should have shorted Bitcoin through MSTR. MSTR was such a great short right here. It hit that 430 area, and I could have shorted it. And you could use like the MSTU, I think, MSTU. Oh, no, not MSTU, MSTZ. MSTZ is the short here. Yeah. That Monday, shoot, I should have got in because this would have been a great way to play Powell because the Bitcoin was already going down just before closing on Monday, like an hour away, I think it was maybe an hour and a half away. It started dipping. Bitcoin started dipping, and the way Bitcoin was doing it, you see this? Because I drew this thing. This was Sunday into Monday. This was Sunday into Monday morning. So Sunday evening, Monday morning, you made this move. And then during the day, it made it again, right into Tuesday. See this whole thing. So Sunday was here, Sunday into Monday, move up, made this huge thing. So then I said, like, all right, I'm going to draw this rectangle right there. on this red candle, and then the way Bitcoin was doing Tuesday, yeah, you would have been like, oh shoot, this is going down further. This is going down, and it was perfect because this was right before Powell right here. Because if I was shorting Bitcoin here, I would have already had a ton of profit by the time it got to this point. So from 106 to 107,000 here, this would have been safe. This would have been safe because let's say Powell said some good things and it bounced right back up. I wouldn't have cared. I would have gotten out. I've been like, okay, whatever. I lost some of my profit. I would have got out and been done with it. But shorting here would have been perfect because then you had this whole huge move because Bitcoin is just so volatile. You know, you've just been like, shoot, you know, if Powell said bad things, hell, man, just shorting above here, I would have safety. I would have had a safety margin because if Powell said good things, I had time to react and get out of my short. But if Powell said bad things, I could have just stayed there and just didn't do anything, right? Because it's just weak. It just gets weaker and weaker because there's no way anything was going to change what happened after what Powell said. And because the market was so terrible, it was just like, shoot, man, I didn't need to do a damn thing. I could have just like stayed in that short for the whole week, pretty much into Thursday. Yeah. Crazy. Or, you know, if you're greedy enough to pre-market Friday, if you just woke up early and you could sold pre-market, I guess, that whole short on the MSTR. And yeah, you use the MSTZ there. That would have been crazy good. That's beautiful. So this is what I've been using most of the time. So MSTX, MSTZ, but even then I wouldn't use too much because like I told you guys, the first week of December, I'm like, dude, I got my money. I'm out because this was the last big trade to make right here. Right? Remember when it first broke 100K in Bitcoin? That whole thing. I think me and HB just jumped out right here. It was just like, it's just too obvious, man. You're just like, shoot. It just jumps right above like 430 again. And you're like, well, and it starts dipping right into it. It's like, oh shit, get out. And then it just flushes right back down. I should have shorted right there too, but you know, I told myself I'm not doing it. I'm done. I only shorted this part. I'm done. I'm not going to play these games where I have to pay attention to the shorting Bitcoin because then I just bought here and here again and it popped up like last week on Monday and then it was like, oh man, look at it. It's trying to get to 430. Okay, I'll hold it, and all of a sudden, whoosh, and I'm like, oh shit, get out. So yeah, I hate doing that because you have to pay attention, right? I mean, you could set stop loss and trailing stop loss, like I told you guys in October. You can do that, but I like to monitor my positions a little bit and watch where it's going, and then just cleanly get out. But if you do too many stocks, yeah, you got to do like stop losses and set everything up ahead of time because it's just. I mean, I'm not a multitasker, but hey, if you guys like doing that yourself and you have a dozen tickers looking at, you can because there are so many opportunities on Friday, man. Friday you had I was looking at everything. I was just saying like, oh, look at sound, look at that, right? Look at that, bounce right on that support and just bump right back up. So it crashes right into it. I say, okay. It does a undercut and it rallies, undercut and rally, and then a lot of stocks were doing that, undercut and NVTS. Would have been a beautiful short if you are a shorting person. NVTS, like you see Tuesday come up here, right up here before Powell, right into those moving downward sloping averages, right into this red line I drew whenever 3.63 hits right there, and then you had these moving averages that are sloping down, and all of a sudden he talks and it crashes right back through it. Come on. So when you just look at these charts, you just keep getting blown away. A lot of times I'm just surprised. I'm just like, oh shit, this works well. But I just don't have time to be playing every ticker I see on the board, you know. So, but it's good to look at because a lot of times you got to train your eyeballs. Yeah, you know, Palantir, stuff like this. Yeah, a lot of times, even if you're not trading it, it's good to look at charts because you're just training your eye. And I'm sure AI will take over one of these days and take over this job for people because, but as a human, this is very, very intuitive. It should be very intuitive for you to see. You just see patterns all the time, and it shouldn't be hard at all to be like saying like, and you just want to make a call, even if you're not playing money to it. Just say like, okay, I think stock's going to hit here. Stock is going to hit there, and see if you're right, and just keep training yourself, because when you get into the real world and start doing it, you just don't have time to be like second guessing, right? You have to be very instinctive, very, very quick, no second guessing. You just look at a chart and you can realize right away, like this one, right? Look at Mind Medicine. Look at this. Look at this. Look at what it is doing. It pops up and then makes huge red candles right after. You just be like, okay, if it hits here, I'm shorting. It hits here, short. And it goes, that's how traders work in real life. And that's why most of those guys, they get stressed out and all this shit. You're going to do a lot of fucking blow, trying to keep yourself awake, looking at all these damn things flying about you. And we're not even talking about options. I'm just talking about regular charts of prices. If you're adding the options on top of this, that's a second order, third order, fourth order like effect to everything. And now you're looking at a gazillion charts with 3D plots and everything, and you're just probably, your brain is going to get fried pretty quickly. So that's why I don't play the options. I just don't want to overthink things. I want to keep things simple, and I think a lot of people can make plenty of money just keeping things simple. Once you understand this, you can graduate and move on, because if you can understand this, then all you got to do is tune your brain when you're looking at options, because now you're just not fighting only price, you're fighting the slope. So that's like calculus. So the price how the price is moving down. So you take a derivative of this line, and then also the volatility, right? So you look at the true range of everything. So we were talking about average true range in October, things like that. I think, yeah, then you'll understand. And then from then on, yeah, you can figure it out. But most of it is just looking at charts, man. So that's the basics. If you can do that, you can do everything. Like here, see? This was back when Bitcoin broke 105. If I was shorting CLSK, let's say I wanted to short this, see what I would do. So I see this little line I drew here, 1521. It breaks down that. Then I see this thicker red line at 14. I see it started moving down. I see this. It's hitting this 12. Then yeah, I probably would start shorting around this area and then wait until it gets back to 10. Because that's probably where it was going to go. Yep. Now that we're back at 10, yeah, maybe it's going back to 16. I don't know. Right? For the next 2-3 weeks. So that's what I'm looking at. I'm looking at the Bitcoin like stuff. Mara is more obvious. You see this? So this was already failing back in Friday of Thanksgiving. So Black Friday. You had another failure here. This is when Bitcoin finally broke 100K. Weakness. More weakness. And then you had this last chance to short was right here, probably last week. You see what it was doing? Do. And then if Powell started yapping and started crashing, you would have been short right there, right that minute when Powell started talking. And then you would have made this gain down here. But yeah, you could have just shorted right up here and waited all the way back in Black Friday. And you could have had that position there. So then, yeah, that's it. All right. So anyhow, let's see what we got. What other things? Yeah, I'm looking at RXRX again. So it's back at $6. Maybe I'll buy that again because I was sold around here a little bit. And then when I saw this, I was like, uh-oh, looks like it can't break out. So I got to sell the rest of my position there. And then now I'm just looking to see if I would want to buy it. But I'll tell you, this is one stock that CKJ3 was looking at buying. You see this? You see this? This is a biotech stock. A lot of biotechs look like this, dude. Very terrible. Ugly. And this is why I said don't buy nothing in December. Because when I was looking at the small cap complex, and then you look at XBI, which is the biotech sector of it, just look at that. It's just no, man. When I see this, I'm thinking it's going to crash. So if I see a recovery in the next coming weeks, I won't believe it, really. I mean, you got to prove to me after January 10th that this thing is going to break out. Because if it doesn't, you see what's going to happen? It's going to try to get into this box here, this purple box. And if it fails here, bye-bye. We're going straight to 84. And I don't think it'll stop at 84. I think this thing's going right back down to 60. Yeah, it could be that bad by the end of January, I think. It could be that bad. So there's a lot of things that have to be proven right now. You look at the IWM is doing this. Okay, yeah, it can recover in the few coming weeks, but I no longer believe that it's going to rally. It's just going to fail just like in 2021, November 2021 right here. That's the end of it. I mean, you have this bowl shape, you have a smile. Yeah, I see it. Yeah, theoretically, it should go up. Yeah, it could. But Powell can just change anything in a second, split second. So he'll talk again end of January. Got about 40 days for him to talk again. And whatever he says will control the market. Doesn't matter what. He determines what you'll see. Yeah. So until that tune changes, I'm not believing anything. Everything is just a trade right now for me. Yeah. All right, GameStop. It's been fighting. It's been fighting this area. I don't know. Come back into this, huh? We'll see. Maybe in the next coming weeks, maybe it'll jump to 50 for no good reason. I'm sure there's plenty of people that want that to happen. ENVX, I saw this on Friday, is doing this. I don't know. It's like a battery, lithium ion. Yeah, I don't know. I didn't put it on the list of things to buy or things to look at, but we'll see. Maybe I will put it on. So, GKS, Chinese solar cells. Yeah, we're back here again. See, back at 23. See how much it keeps hanging around 23? But the way it's like moving, it's like it goes up and down like 20 something percent. Yeah, so yeah, it could be something you could trade, but I'm not really convinced it's gonna break out of this square permanently, but it could. But again, I don't know about Powell and what China's gonna do, and then when Trump gets in, I don't know what he's gonna say. Oh boy. Nova, same thing, $3.60. Yeah, I think it might try for $6 in the coming weeks, but we'll see. All this stuff is now up in the air. I don't believe too much how long this will last. Hims, I might come back in. Hims tested 25. That's good. You know what? This could go back to 36 and higher. This might be ready to go higher. However, like I said, XBI, I don't know. This thing looks weak. Oh man. So a lot of stuff I've been eyeing for a bigger trade, for a bigger swing trade next year, I'm now concerned about. I'm just like, oh man. If Powell said the right things, those damn stocks that I'm telling you right now, yeah, could go up another 100 to 100% easy with the charts that I'm presented with. But because he might not give you that, then yeah, forget it. Sorry, folks. Sorry. Might not happen then. It won't be an easy year. It's gonna be a tough year, and I'll show you a video where Larry Williams lays out why I don't think it's an easy year. I think he's pretty much saying exactly what I was thinking, last week. So he's saying exactly what I was thinking. So he's going to present to you his 2025 outlook. Okay. So let's quickly go over the sectors. We got technology, XLK, right? You got XLC, right? They both look fine. I mean, they took a hit. XLC has been the leader, so this is where all the stuff's been. You got your Netflix, you got your Meta, so that's always been good. You got XLK, yeah, and then you got XLY, Tesla dominating this bad boy here. But what you got? What you got else? Oh, banks. No, they pulled all the way back. Real estate. Oh my God, real estate terrible. If you got REITs, you were having a terrible time since Thanksgiving. Energy. Oh, even worse. Thank you, Jerome Powell. Oh yes, see. Damn. The thing was, these things were already going down before he talked. It's as if people already knew what's going to happen. XLI, same thing. XLU. Yeah, see, because the bonds were being raised. Yeah, bond yields were getting. Oh, XLP, terrible. I don't know. That's not a place to hide. Staples, XLV, healthcare. So a lot of this stuff, these sectors here, yeah, you can look up. This was like one of the first presentations I did in October. The 12 sectors of the S&P 500. XLK is technology. XLC is communication services. XLY is this consumer discretionary. These three make up the most aggressive of the sectors, meaning like if these guys are going up, then you would assume that people are not afraid about the US economy. Remember, we are a service economy. So back in the old days, people probably worried more about XLI, XLB, XLE, you know, when we had US oil, you had US steel, you had all these companies that made manufacturing in America. These things are over. This is not what we are. We are Facebook, we are Twitter, we are all these other things. That's how it is now. And then you have the other ones in the middle, kind of like XLF is the banks, XLRE is real estate. And then you have healthcare, XLV. So this has the bigger pharmaceuticals, not like XBI. XBI are the small caps. Okay. And the small cap pharmaceuticals are very, very speculative. This is where Martin Shkreli likes to hang out, right? He just likes to gamble on reading a lot of drug trial reports and figure out, oh yeah, this company is going to be great because I believe this drug is going to be great. What's up, Duale? So XLP is like Dollar General, Dollar Tree, General Mills, Hormel's chili, you know, Campbell's soup, like all that stuff. That is where XLP is. Usually XLP should be weak. Very rarely you'll see XLP leading the way. Most people try to hide in it when you have recessions or something like that. But yeah, I think people aren't too interested in that in general. XLU, utilities, again, another place people hide out when there's a recession. But I think the recent pullback here, XLU, XLRE, was because of interest rates rising again on the bond market. Okay. And I think Jerome Powell just killed everything. Just that was a sudden shock, right? Move. Okay. So let's look at the bond TLT right here. So this is the last point right here at 87 for the TLT. This is the 20-30 year bond ETF. It has to bounce from here. If it doesn't, you're going to have bad times. Bad times next year for sure. So you don't want bonds to be too weak. You don't want bonds too strong for the stock market. So ideally, it should stay in this range between 87 and 99. So I was trading this thing from here 89 to 94, 95, and you know, you can keep some of that for the dividends, but in general, yes, it's very weak. And you can buy more again back down here and see if it can climb back up into this blue square to 95. And you can use the leverage ETF from this point. So it's down to 42. So last time I was in 45 to 50, and you can do 42. And, you know, towards the end of the month, you'll get a dividend. So this is the dividend is essentially your coupon that you would have got if you bought the bonds directly from the government. So most people, you know, you're not going to open an account with the Treasury Department, and you're probably not going to go through your broker and buy a bond because it's pretty annoying to sell the bond after you buy the bond. Yeah, you won't find too many buyers. I think the market is not too liquid, but when you use the ETF, you can freely buy and sell the ETF at any point. So that's kind of why most people like to play something like TLT. And then you have options on the TLT too. So that's also another benefit if you're an options player. But again, yeah, I just use the leverage if I want to trade this back and forth a little bit. I don't know if it's going to get up to 60 again next year. Like I might just trade it for another range up to the 50 area. Maybe it can get to 55 or so, but yeah, I don't know if it's going to go any further. The other one was like EWW, the Mexican one. See, This one here. So it got up here and it fell right back. Thanks, Jerome Powell. Thanks, all that stuff. So is it good time to buy? So if you're in the MEXX, yeah, you can buy it back at 10. Like you can sell it back at 12, but eventually I think this will break out. So we have to watch the dollar though. So next year at the end of January, watch what the Bank of Japan's gonna do because we've been testing this 108. I don't think you'll like that. So the 108 area and above, no go. You go above there, you're gonna have problems. Same thing with the TLT. TLT below 87, yeah, bad news. That's equivalent to like a 30-year bond of maybe 4.8 something percent to 5%. Yeah, you won't like that. You won't like that. The market's gonna scream hell, and it's gonna crash. So let's see what else we gotta talk about. SMCI, right? Yeah, okay. Yeah, I bought back some on Friday. Let's see. So you got SMCX. Yeah, I got some. I think if you look at here, oh, this was a nice trade. Yeah. Friday you buy, and then you could have sold right away within the morning from 40 to 47. That would have been nice, right? And so I did that, and I kept some for next week. And I think right now we're going to have SMCI overnight. SMCI is 2.5%, so it's up 2.5%. So SMCX should be about 5%. Yeah, right. Okay, yeah, because it's 2x. SMCX is 2x leverage. So let's see. 5%. So it's going to be back. It's going to open back. SMCX is going to open back at 44.7, somewhere around there. And then here, see, 2.5% here. So it's probably going to be a 32, huh? Yeah, just about over 32. Perfect. So watch that. So it looks like it's time to get back into SMCI. We'll see if this is going to pump into the New Year's. And then if we're lucky, maybe a week into the New Year's. So maybe we'll get this back up to the 40s. Maybe if we're really lucky, we'll get to the 50s. Very nice for SMCI. And if you're an SMCX, yeah, you should be getting close to 75, 80, maybe if you're lucky, 100 from 43. So that'll be like 100 something percent gain. Another gain you can get real easy, no problem. Keep it easy. That's what I always say. Don't do anything crazy. Wait for the big events to pass and then see if there's an opportunity. If there is, then take it. There's no rush. Be patient. Only take chances when the opportunity arises, Don't take unnecessary chances. Another one is NVO. I'm going to play a video on this. Here's the drug maker. See that? So everybody was like Ozempic, or whatever. I think, yeah, Novo Nordisk doesn't make Ozempic. I think they make another one. It was another one that had issues with its trial or something like that. Now it's back at 85. Yeah, look at that. I don't know if it's worth buying. I mean, Boeing was worth buying. So if you bought down here, like at 138, that would have been good. Yeah, that was really good long for anybody waiting for here. I'll show you this chart. Let's see. Yeah, perfect. So you see that? The 139 area, it hit that. Now it's back up. So wait for it to pull back a bit if you missed that whole move, and you probably can get in again. So this would be a good stock to keep in a long-term portfolio. The other one is Intel. You see that? So now it's like back at 19. It tested that again. Okay, yeah, see what goes. Yeah, maybe it's time to get in and hold for a while. But like I said, I think next year is not going to be easy. You'll see. When I play the video, you'll see. You'll see. Okay, Upstart. Upstart had a breakout. Yeah, maybe this one. See? This one was testing this area. It got damaged by Powell. So watch this one. UPST, Firm, same thing, same issues. There's a lot of charts that look similar. Very similar. Look at that. FOUR. All three of these are in the fintech area. So technology with financials. Essentially banks that use a lot of tech, okay? And so Upstart uses AI for its loans, I forgot, some kind of payment system. And then buy now, pay later is Affirm. I don't know if 4 is like maybe close to Square or something like that. Square. I think they changed their name, right? Square. Now it's called Block. Yeah, I don't know what the heck Jack Dorsey is doing over there. All these idiots keep changing the name of the companies. Like freaking Facebook turns into Meta, and it's like, God damn, I don't got time to keep track with you guys. Okay. All right, Tinder, right? Match. Yeah. There's a lot of these bottom feeding stocks, like Bumble. Yeah. I was thinking like maybe next year would be great for these things because the losing stocks like this is the one you want to get. Because new year might be a new change in guard, right? New change in attitude. People looking at that stock they might be interested in buying now, because all the people that lost money are out. They're getting out. Duolingo. Oh yeah. We were talked about this stock several times in the past. Yeah, it broke out in September. I don't know. I might wait for this one. Yeah, there's so many other ones. Yeah, VIP. Oh man, this is a cruise line. Yeah, the problem with this one is like it doesn't have much history. So Viking Cruises. Yeah, I'll have to go sort through everything and see what's new. QUBT, yeah, again, yeah, the whole quantum computing. I don't know, man. This thing. Yeah, it's just a day trade. I can't touch this thing. I don't know. This is just against my Voozy was great. Oh man, look at this guy. Voozy. This had a lovely trend, right? Since the November. Oh man, this is beautiful. It's kind of a meme stock, and the way it moved on Friday. Wow. When you look at a chart like this, it makes you believe like, Jerome Powell is just gonna back off what he did on Wednesday, but I don't know. Cover scanners yeah, we gotta cover scanners again. Yeah, definitely for sure. Yeah, I have to. Actually, I'll show you something. Here, it's not a scanner per se, but you should have a list of things to scan, and they don't have to be actual stocks. Let me see. But yeah, we have to cover scanners again. I'm not really too good at that stuff. Let's see. Blah 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 blah. Let's see. Right here. So this is from Tom Bowley's presentation. If you look here on your left, this is all the industry groups with the ratio. So the colon means divide. Okay, so this is computer hardware divided by the S&P 500. So this is just relative strength. So last week, pretty much I would assume every industry group would have been red. It would have been down. But if you look here, computer hardware went down less than the whole S&P 500. Airlines went down less than the whole S&P 500. Aerospace went down less than the whole S&P 500. Look, footwear. Look at here. So Nike and all that went down less than the S&P 500. Yeah, so we could go down this whole list, but if you remember when I was scanning maybe some weeks ago, I said like what I saw was gambling was up, apparel was up, so people were buying clothes, people were gambling. What else was up? Tires, right? Auto parts. I saw they went up, so that wasn't a surprise. They always seem to be doing well. Man, what else was going up that looked pretty interesting to me? Cruises, travel, yes. So we'll definitely have to go through it again. But from what I see with that scan, and then you compare it with this, with the relative strength in the week, yeah, you see clothing, you see the travel here. What this tells me is that even though the market went down that Wednesday, it wasn't enough to shake the trend of what we saw already with the scans. people were buying stocks that didn't say there was going to be a recession. Okay. What is a problem, however, is that Powell said he's going to fight inflation. So when you have these strong moves in the yield, and Lennar had earnings last week, and told Lennar, no, maybe it wasn't Lennar, it was Toll Brothers, maybe it was both of them, but two home builders had earnings last week, I believe. And when you look at that, this is what I was warning about home builders. Because if you went back to, I don't know which video, which stream I did, but it was a while back, maybe just a week back, actually. You can see I was talking about the ITB home builders here, home construction. You see what it was doing? It was just going sideways since August. And I think this was the time I told people to buy around here, July and whatever. This was on Grace's stream. It was before I came over here and talk about stocks much. But, you know, one of those late night streams, I kind of just made a joke. Is like, well, it was already too late, actually, because it was like, it already happened last week, the week before. But I said, yeah, you can still buy it. So I listed off a whole bunch of home building stocks. So if you bought then that Monday, right at the open, you could have sold into October, no problem. But essentially, since July, it's not a straight move up, right? It wasn't like here. You see this? When you look at October 2023 to December, even though it stopped moving up, it still went up, right? You had this huge move up to get back to the top of this channel. And from there, it just hugged the top of the channel. Then it pulls back down. You go back to the bottom of this channel that I drew. And this channel was just made because I just hooked up the bottom of October 2022 and October 2023. And I said, okay, I draw a line between them and I'll draw a parallel line up here. So what I do is like, yeah, you just make a parallel line at the bottom between two bottoms. And then you make a channel because you put the top line parallel. And this lines up well with the August 2022 high and the July 2023 high. And then the March 2024 high, you see that? So like once you got 2 points, 2 significant points, you can just draw a channel right away. And then you see what it did, right? It just hugged. And then finally you got this March move where it tried to get higher and then it just collapsed. And that's when you know you got to get the hell out. You're just like, oh shit, I got to get out. Now, when you get out, it goes back to the bottom, right? It goes back to the bottom. And then you're going to be like, well, you know, it might be a good place to buy because like I can draw another line because you can just draw a line here. See these bottoms here? Here, let me draw with another color. Cyan. I'll do a line and I'll make it thick for you guys to see. You see that? Perfect. And it's moving back up. But you see what's happening this time? It never gets to the top, right? It never gets to this parallel line on top. It's just trying weak. Nope. And it does this in October and does one last move in Thanksgiving. And guess what? That's when you know this is like a distribution, right? This is Wyckoff. This was what Wyckoff would be saying. It's like, oh shoot, that's the last upthrust. And then that's when you collapse right through. And then now we just went right through here. So what that tells me is like it's over. It's over for home construction, honestly, for the rest of the year. Well, not the rest. I mean, rest of next year too, 2025. So I believe home prices themselves will go up because what's going to happen is Powell will say, "Whoopsie, I made a mistake. I kept the interest rates too high for too long." They'll do a course correction. They'll start cutting rates again. When you see that, the ITB will rush back up. So it'll probably hang around here at 97. This is the ITB, is the home construction index. It'll come back up here, maybe July, maybe August, right? It'll try to come back towards 120 into the end of the 2025 year. And then that's when you'll see peaks in home prices, because the home builders will probably stop being aggressive on their construction next year, and then it'll suddenly cause like a shortage in housing because the demand will still be high. And then in 2026, you'll see a huge spike up in housing prices. I think 2026, you'll see a sharp acceleration. When you see housing prices shoot up very rapidly in 2026, that's when you know, oh, shoot, get out. So I think towards the end of 2025 into the early part of 2026, I would probably recommend anybody thinking of selling their house and want a good price. If you're in a very popular metro city, definitely think about it. You should dump whatever you have. Get the cash, dump your cash into bonds. Once you get into or gold, whichever. I don't know. Gold and silver might be still good by then, but we'll see. But this is maybe 2-3 steps ahead. So I can't think that far ahead about where I would put it. But let's say bonds. All right, let's say bonds. But I don't know if bonds is a good place. But I'll assume that maybe bonds are still a good place to hide out. You get there, take your money, dump in the bonds, and then wait it out. Wait out the crash for a year or two, because you'll lock in a good rate for bonds. Probably maybe 3% for at least maybe 4%. I don't know, like for 10 years. Yeah, that would be good money, right? So you don't need to think about it. Leave it there and then take it back out, because you can sell your bonds, dump your bonds to someone else, and then if you need the cash again, you can just do that, and you can buy the stocks. A house on the cheaper price, a house that you might like, but not in the same city or not even in the city, right? You can just take that money and go elsewhere. So that's just something to think about. That's just 2-3 steps ahead, though. But when I see something like this, yeah, it makes me very cautious about where things are going to move in a couple years' time. Because like I said, the housing stocks, they assumed that interest rates was going to stop peaking a year ahead of when it was going to happen. So this thing was already moving up like this a year ahead, and now it's moving down probably a year ahead of when houses probably will peak. So that's kind of how it goes. They don't move exactly at the same time. Just like gold, like I said, doesn't go with inflation at that moment. They probably tend to anticipate inflation, right? That's just how it goes. All right. Okay, let's see. We'll talk about Boeing. Yeah, we'll talk about that. I'll probably talk about other things some other time. I don't think there's anything to say. Okay, we're already in the hour. Let me play some more videos for you guys. Oh, let's see. Micron, Carvana. Oh man, Carvana. My lost opportunity. Oh, why did I sell it so early? I could have got 6,000% in a couple years.
Back to Power Lunch. As we get ready to close out 2024, we want to zero in on a standout stock. Despite a 3% drop today, online car retailer Carvana is up about 325% this year alone, up over 190% since our April stock draft. That has helped push the mentalist Oz Perlman into first place in the draft. There you see the rankings, right? And not by just a little bit. Look at the margin of difference there. Less than 2 months to go in the stock draft. Here for a Power Lunch exclusive, Ernie Garcia, Chairman, President, CEO of Carvana. Ernie, welcome. Good to have you with us. I think part of the story behind the remarkable stock performance, 110% in the past 6 months, is what you have done in terms of profitability and making the company much more profitable in 2024 than it has ever been. Most profitable, as I understand it, car dealer chain in the country. How'd you do it?
Oh, wow. There's a lot to that question. I think, we're going to hit our 12-year birthday in January, so just in about a month. And I think over that period, we've had a ton of great people at Carvana that care, that have built a completely different business model from anything that's been available to customers in the past. Customers go online, they can pick a car in minutes, they can get it delivered to their door as soon as the same day now. We handle financing and everything else, so we're deeply vertically integrated. And I think the experience that we deliver is one that customers love. So we're now growing faster than any other automotive retailer out there. And then, the economics of that business are much different than traditional automotive retail. So we give our customers a discount and we're still the most profitable. And so that's a powerful combination. And then, we're only 1% of the market, so we got a lot of room to run. So I think there's a lot to be excited about.
So how did you boost profitability specifically?
That would take me a while to talk about, and I think I would bore your viewers. So I'm going to stay away from too many details. But I think it's a completely different model we've built over a long period of time. We put a ton of effort into making sure that we found as much efficiency as we possibly could in every area of the business. The way that we recondition cars to make sure they're in great shape for our customers. The way that we spend money to deliver cars to a customer's door, making sure that that's more efficient and faster. The way that the entire transaction is managed. A bunch of things that we do in finance. We've worked really hard to make every part of the transaction more efficient. We think that there's a lot more room to continue to find efficiency. So we're going to work hard to continue to find those gains and then share them with our customers and hopefully keep the party going.
Ernie, it's one of the greatest turnaround stories in corporate America. I mean, literally, I can't think of one that has been more astonishing. And for those who haven't followed us closely, this isn't like a meme stock thing where you were Hertz and a bunch of investors came in and said, let's take a flyer. I mean, what is your gross profit per car now?
It's significant. So, we've been the last couple of quarters in the $7,000 area, give or take. And we're able to do that by cutting out more middlemen than has traditionally been the case in automotive retail. We're basically a stacked automotive retailer. We're a finance company. We're a logistics company. We're a reconditioning company. We're a company that buys more cars from customers than we sell.
You see that? This is one of the things that you got to learn, man. Cut that middleman out.
We're a big wholesaler. And by stacking all those functions that exist in the automotive ecosystem, we're able to give our customers a great deal, and we're able to be more profitable than any business has ever been in this industry.
Yeah.
And so it's been pretty fun, and we're excited about it.
Again, to make sure people caught that, $7,000 per car is your gross profit, but still, I mean, that's a big number. So just to go back 2 years ago, there were people who thought your junk bond, you're doing more debt issuance, try to get through that difficult time. They thought it was a zero. They didn't want to go near it. A lot of the bankers who got involved were able to kind of help keep you going, but also it was just the ability to kind of navigate that was very difficult. I always think back to when Elon Musk was sleeping on the floor at Tesla when it nearly went bankrupt, and I just wonder if you have any moments that were like that.
I think the truth is that building anything truly different is always very hard. And I think most of the time, most people don't get an in-depth view of just how difficult it can be. And I think, unfortunately at the time, but I think fortunately with the benefit of hindsight, I think 22 and 23 were a tough time, was a tough time for us. But I think inside the company, a bunch of people stood up tall. We did our best work, and we're on a great path. And I think that we're a better company for having gone through that. So we definitely have taken our bumps along the way. I think that that's often the case when you're trying to build something different. But I think, today's a good day, and we're extremely excited to keep it going.
So let's say I want to buy a car from you, and I go on your website and I see that there is, and I note that you have Tesla Model 3 is the biggest seller among your cars in 2024. Let's say I see a Tesla Model 3 that I want to buy. We agree on a price, and you deliver it to my house, and I decide I don't want it for whatever reason, just because it didn't have this or whatever. What happens then?
You call us up, you tell us you don't want it, we come get it from you.
You come get it
we give you 7 days to drive the car around your neighborhood, see if your golf clubs fit in the back, and if the cup holders work for you, and if your kid's car seat fits in there. And if it works, awesome. And if it doesn't, you give us a call, and we'll either bring you a new one or we'll take it away. Our goal there is to make that as easy as possible, to make sure that customers tell that story, and then other customers know that if they want to buy a car from us, if they make a mistake, it's okay. They can return it. So it makes the decision a little easier up front.
And if I want to sell a car, I assume it's the same kind of operation. We agree on a price. I'm selling my Tesla Model 3 to you. We agree on a price. You come and pick it up and give me a check.
Correct. We'll come pick it up as soon as the same day. You can come drop it off to us as well. And then we'll give you, we'll put money in your account, and we'll call it a day.
Ernie, quick final observation, really. You can take it however you want. The stock is now trading at over 100 times for its forward PE. So for those who look at it and go, great job, nice turnaround, I ain't going near it, do you think your growth is going to justify that kind of multiple?
I think I was nervous about what you were going to say once you set me up like that. But I'll say I think we're going to let the stock take care of itself. I think we are 1% of this market. It's $1 trillion market. There's a tremendous amount of opportunity. Our job is to go out and take advantage of that opportunity. I think investors' job is to figure out what the present value of that ultimate execution is going to be, and that's their job. I think we're going to keep running fast. We're going to keep trying to solve problems. We're going to keep trying to deliver great customer experiences, and investors can figure out the right price.
All right. He had an answer. I mean, you know, what am I going to say? Don't buy the stock. Ernie,
You
thank
put me in that spot. You did that to me.
Listen, if you can get through what you got through, you can handle any question. Ernie Garcia, appreciate your time today. Thanks for joining us. He's the chairman and CEO of Carvana. And still ahead, Treasury.
Yeah, I used to have that stock. Man, I thought I was really clever when I bought it at $3 dollars, sold it at 15. Yeah, I bought it at the bottom. If only I held it, man. Yeah, I mean it's easy to say that then, but it was quite an interesting like stock to even look at. Oh man, let's see. Yeah. It already crashed in 2020, and then it crashed again back to $3. Yeah, $4. That's what it was. So that's why, and one of those things was, like I said, you look for weak stocks in the December month. Carvana was one of those stocks. It had a terrible 2022. I mean, 2022 was bad for a lot of stocks, but Carvana going from like $300 to $3, why not? So you want to look for the damnedest of stocks in December, because come January, you'll maybe at least get a reflexive bounce. You'll get an instant bounce. So it went from $4 to around 15 to 18, depending on how fast, or 19, I guess, if you got it on intraday, you got it quickly, and then pulled back. So the thing is, that's why I have that list of bottom feeder stocks. I don't care what the story is. I don't care what it is. I don't care the fundamentals. There's somebody willing to buy at a certain price. There's always someone willing to buy. And a lot of those losers get created because the whole year has been going down, and people towards the end of the year will have to worry about taxes and say, hey, this stock has been so bad to me, I just got to dump it, take the loss, use it to offset my gains for another stock somewhere else in my portfolio, and that will be it. Done. And that's it. And a lot of it's emotion, And I bet those guys that sell right at the low are eager to buy it when it starts popping back up. So I get it at the bottom, the lower price. It jumps back up, right, to 15, whatever. It pulls back to 8. And then those guys are thinking like, I'm not coming back to that stock. And all of a sudden, it goes back to 16. And then it goes to 20. And then those guys that sold at the bottom in December at $3 are probably going to be like, shit. And they'll start chasing it. And it'll just keep going up and up and up and up and up. It's just human psychology. Human psychology. Buying low, sell high is way harder to do. It's very easy to say, but I swear it is not easy to do in real life. Otherwise, I wouldn't take advantage of people doing dumb crap all the time, in the stock market. So that's what you have to watch out for. At least you realize that. Then you can see. Okay. So let's go and show you the screen here. So, this is a beautiful chart. So beautiful. Yeah, I bought here. Right here. I remember these days. Like it was almost New Year's, huh? Yeah, right here. Right here. It hit it multiple times. Like in Thanksgiving, first week of December. Yeah, last week near Christmas. And then went here just a month after, pulled back, and I should have just bought back there. Right here, this $8 area. And that was it. Because once it was done with that, it started just fly. It was just flying. So now we're at this area here. This is key because this was where we had that last boost in August 2020. And look at that. We went right back to that support. I'm guessing what's going to happen with Carvana is it's going to come back down here next year and it's just going to go sideways. That's it. I think the story of Carvana is over. Once you see people talking about it on TV, it's done. It's done. This is done. So now they're all bullish about this stock. I think we're finished here with this stock. So if you want to short it, wait for sometime in 2020, late 2025 into 2026. You might short it. You might short it all the way back to $20 from $200. So yeah, this is the beauty of charting. Yeah, you can see this all right away, man. That's just a potential. I'm not saying it's gonna happen, but I'm just saying like you just look at a chart and you go like, well, that's a possible scenario. And if you wanted to short, yeah, think about it. Go think about it. Okay, let's go. Another video. Demo Carvana. Oh yeah. Drug companies. So
Joining me to discuss that and what's next for the GLP-1 market is Emily Field, head of European Pharma Equity Research.
all right, hold on.
Joining me to
What is this? Cagrizima trial results fall short. Average patient weight loss by body weight percent 22.7%. Trial results. Novo Nordisk projected results 25%. Okay.
discuss that and what's next for the GLP-1 market is Emily Field, head of European Pharma Equity Research at Barclays. Emily, great day. So glad you could join us. Why is Novo down so much on this news?
Yeah, thanks for having me. I think, one thing I've learned covering the space now for a while is that so much of, these clinical trial readouts are just about expectation setting. And, the company has published a lot of phase 1, phase 2 data for this drug such that they set this bar of 25%. And it looks very, very achievable. So, this is still going to be a fantastic drug, one of maybe could still be the best out there. We still have to see the full data. But they didn't meet the bar that they'd set. So that is why the shares are reacting so sharply negatively today.
It just seems ridiculous. I mean, what is the kind of number for the leaders of the pack are currently Ozempic and Mounjaro, right? How much body weight percentage are those drugs typically shedding?
Yeah, so for Wegovy, which is the Ozempic version for just weight loss, it's about 15-16%. Zepbound from Lilly, it's about 20, maybe a little over percent. So I think one of the other reasons that the shares are reacting sharply today is that it's not completely clear, is this going to be a drug that's better than Zepbound or not? Does this put Novo ahead of Lilly? We can't say that just yet.
Which would certainly explain why Lilly shares are up 3.5%. Although, again, you'd think, well, if that's the whole issue, then they should be up a lot more than that. You think we're at an inflection point, though, for the space more broadly. How so?
Yeah, because I think that though obviously today was a huge disappointment, there's been a lot of good news for the obesity space in recent weeks. One thing that came out just yesterday is the FDA ruled that compounding is probably going to have to come to an end for Lilly's drug. These are these kind of bootleg versions of the drug that are available at med spas because they said Lilly now has enough supply to supply the market for the foreseeable future. And also Novo was able to close their transaction to purchase Catalent, which is going to allow them to dramatically expand their manufacturing. And so we're going to be in a really increased supply situation. So that could mean that just a lot more people are going to be able to get access to these drugs in the U.S.
Does that mean price is coming down? And how is the science of these drugs changing as well? So the leaders are still these injectables, but we've been hearing about pill forms coming. And was Cagrizima, if I'm saying it correctly, how was that distributed, or what made that different from the leaders currently on the market?
Yeah, so this is Novo's first combination drug. So it's basically the same dose, same drug as Wegovy, plus another drug called cagrilintide. And the thought was that those two are synergistic and can lead to more weight loss. And yes, all of the sort of high efficacy treatments today are all an injectable. If you take them once a week, it's pretty easy. But there's a huge debate of could orals open up this market to a big degree? And the next data point on that will be an Eli Lilly drug called orforglipron that should have results in April of 2025.
Are there any other names, Pfizer, for instance, that come to mind who could who could in some way vault to the leadership of this field, or is it pretty much set, do you think?
Oh, yeah, there's really been an arms race to sort of enter this market. We think and have a house view that Novo and Lilly are going to remain the leaders because they have this manufacturing edge and an innovation edge. But We've seen Roche, AstraZeneca, U.S. Merck just did a deal with a Chinese company for an oral GLP-1 earlier this week. Pfizer's working on some things internally. So other players will certainly enter this market. It will get more crowded, but we think that that's still a few years away.
And quickly, because you do think the inflection point could be increased supply, should that mean we can expect maybe some downward price pressure finally?
Yeah, that's one of the reasons kind of that's been a little bit of a reset in both Novo and Lilly is that net prices in the U.S. have come down a little bit more sharply than I think we were anticipating at the beginning of the year. However, as long as they can make up for that in volume, which they've done in the type 2 diabetes market, which preceded obesity, it still should mean double-digit sales growth for many years to come for both companies.
Okay, let's see. Hims. Hims does the generics version for Eli Lilly's drug, so that's why you heard talk about oversupply. So the FDA thinks that there's plenty of supply for these drugs right now, so any of the generic makers, they are hard pressed to make any more new drugs, because when you actually have supply met, then the FDA will block you from making your generics, and Eli Lilly can continue on making their profits. Now, this gives you a chance to get back into Hims. Hims is now back at 25, and if you saw here, I was drawing this channel. It went up, 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 and it broke down. And then once you saw that, you're like, crap. I guess that's done. That's done. And finally, you had that news. You had Jerome Powell, which didn't help. Now you went back to 25 around there. And it tried to get back up to 26. So watch this area. Maybe, next year, into next year, you might see a return to 30, maybe a little bit more. But like I said, I got to see how the small caps are doing, the biotechs are doing. Otherwise, I can't believe that this thing can really significantly get higher than 30. Maybe you go for a quick trade from here to 30 or whatever, and that's it. That's all you're going to get into the New Year's. But keep that in mind. Keep these stocks in mind. Okay. Let's go Bitcoin, actually. Bitcoin right here. Yeah, hit right the resistance. See? 96,000 right there. And you have these two downward moving averages on the moving thing. So actually, I would look at the 40. I'm not looking at the 60. Yeah, right there. Right here. So let's see if it can break out into 98 by tomorrow morning. If it is, then yeah, good trade. I would definitely buy MSTR or MSTX to get it, but I would be prepared to, like, once it gets closer and closer to 103, yeah, maybe you can short it again, and then you'll get your money back that way, right? So you're gonna go both directions. You can make money forwards, you can make money backwards. That's it. Okay, let's see. We have one more video. It's gonna be a long one, but I think before that, I'm going to talk a little bit about housing and inflation, because I mentioned it quickly in the Friday stream. I also have some I have to save that for later. We'll have to talk about the carry trade some other time, because once the Bank of Japan will talk and Jerome Powell talks at the end of January. So yeah, I'll have to remember that. I'll have to talk about that. Okay. Alrighty. Let's see. Let me see. Let me get a new window. Okay. Then let's see. Let's see. It's weekly. Let's see. Okay. And another one. And another one. Okay. All right. Let me close this window and go back here. All right. So let me see if I can get that. a link for you guys. I gotta get a link for you guys here. Okay, go here. So this is a report from the BIS. Okay. Forgot what the acronym meant for. The Bureau or something. Let's see, blah blah blah. BIS, Bureau, International Settlement, something like that. International. Yeah, the Bank for International Settlements. All right, remember that. So they come out with these reports, and I mentioned it briefly. And this report is called The Monetary Policy and Housing Markets Insight Using a Novel Measure of Housing Supply Elasticity. All right, if you're not an economist, that's probably boring as hell. But hey, there you go. You can go to that link. You can get the PDF from there. Okay. All right. So let's go and present it. All right. You see this chart here from Fannie Mae? Inflation progress stalls, but slowdown in shelter prices could indicate cooler readings ahead. Now, if you look at it since COVID, what is the biggest chunk of CPI, the Consumer Price Index? It's shelter costs, meaning rent. The rent is too damn high. The rent here is still a huge chunk, right? You see this yellow of the whole piece of CPI. This is, apart from even medical services ain't that bad, right? That's not a big piece of that. So healthcare ain't that. It's just rent. So now let's look at this tweet. In April, not only did the Dallas metro area, population 8.1 million, permit more new housing than the entire state of California, population 39 million, but they permitted more multifamily housing than California. It's a total indictment of California housing policy that these numbers are even close. So there's a supply issue that doesn't match demand. Now, if you look here at this graph, housing supply elasticity affects the transmission of monetary policy to house prices and rents. So on Friday, I talked about how the U.S. has 30-year mortgages. That's pretty much common, right, for housing. Now, if you look at other countries like Canada, the more typical mortgage is around 5-something years. Yeah. So it's easy for the Central Bank of Canada to just raise interest rates and have an immediate effect on housing. For the U.S., that's not likely. If people have 30-year mortgages, they are not in a rush. They are not in a rush, okay, to change their rents because they don't feel obligation to, right? The landlords don't. And also they don't need to change housing. So there's no new supply being introduced. They'll keep their houses. They're paying their mortgages. Why would they sell it? And then if they have to buy a new house, they have to be afraid of having to pay a higher interest rate for the same mortgage. That's where the elasticity comes in. Okay. So if you look at B, where supply is elastic, house prices and rents barely respond. Where supply is less elastic, house prices soar while rents are unresponsive. So the KC is where we're at right here. Okay. So you can read this whole thing. I think they talk about the first world, third world, the things like that. And the first world is like it's tough. The third world is easier. So you can see that like here, divergent trends in housing markets across country groups. Yeah, you can see they got whole kinds of data. So if you're interested in this, they did all the mathematics for you. They did all the statistics for you. So you can see exactly what's happening. And all I gotta say is that the sticky inflation is here to stay if rent is just too damn high. So the service economy is already tough for the Fed to kill because interest rates affect manufacturing a lot more than service. And service is already one problem, but rents and housing prices are a bigger problem, right? So John can be kept pretty comfortable keeping things as they are because that's what the market will give. So he can keep charging what he charges because they have nowhere else to go. It is going to stay sticky. Yeah, that's pretty nice. Yeah, that's pretty nice. They got everything here. Every state pretty much, huh? Oh, they got a lot of index. Yeah, this is a nice little thing. Yeah. So if you're really into economics, yeah, you can read this yourself. Pretty good, pretty good. So now, since we're talking about housing prices, let's go into the last video. All right. So this will close out the last half hour, and you'll see what I mean when we talk about cycles. There is a cycle coming.
Hi, fellow traders. This is Larry Williams, and I'm pleased to be back here at StockCharts.com to give you my impressions of what's going to happen in 2025. Kind of a general overview with some very specific comments. So grab your pens and pencils, and let's take a look at what the future holds. The big thing is, can we know the future? Now, a lot of people say you can't. A few of us say we can. You know, I remember in the 1960s, 1970s, before we had the internet, of course, I kept National Enquirer because every year they wrote a prediction. Their psychic seer said that Elizabeth Taylor was going to die year after year, and she never did. The one year nobody predicted she was going to die, yeah, that's the year she died. So I think it's important to go to the source of predictions. So I'll go right back to my 2024 forecast report. And in a nutshell, this is exactly what we wrote, the very first paragraph of the report. 2024 will continue to see higher prices, erratic but higher. None of my fundamental indicators are even close to giving a sell signal. Be bullish or be out remains my mantra. In retrospect, that was pretty good advice for 2024. So, you know, some of you know I've been doing my annual forecast report for, I don't know, 18, 20 years now. We haven't been perfect on every call, but we've got most of the major moves in the market. I think we can tell the future based on cycles and fundamentals, which is what I'll be talking about today. Here was our forecast for 2023. That's the blue line. You can see what actually happened real time in the black line. That's how it actually came out from the forecast report. So this isn't just a one-hit wonder thing. Here was a forecast for 2024. That was out of our forecast report last year. That's what prices should have done in 2024. And in retrospect, that's about what we had, a nice big bull market. Also, we show this chart in my 2024 forecast report. We're going to look at again a little closer up, but the forecast report, remember this was done late 2023, gold line higher. Yeah, that's exactly what happened. This has been a pretty dominant cycle in the marketplace, and it continues showing some dominance in the market. In fact, here it is, a closer up view of it. You can see what took place. This is what actually happened in 2024. There's the gold line that we had projected back here. And this is how price actually turned out in the marketplace. So you can see it pretty much paralleled. In other words, the past can be used to predict the future. So you can use presidential cycles, which has been a pretty good way of predicting what should take place in the future. If we look at re-election years, that's what this was. This is the general price that prices followed, and pattern rather, and that's what happened again this year. So my point is several things like the presidential cycle. There's some very long-term cycles in the market, some short-term ones. I'll show you my really close short-term at the end of the report today. You'll see what I think is going to happen over the next month or so as well. So it looks to me like we can get a pretty good view of the past. This is what our forecast was for 2024. And that's the blue line. This was published a year ago, and pretty much what happened in the marketplace. So again, is it specific every single day? No, I'm not that good. I think that's probably impossible, actually. So yes, I think we can get a glimpse of the future. It's not going to be precise every single day, every single high low, but a general roadmap to follow. Yes, I really believe so. I think we've proven that for a lot of years now. But here's the important point for 2025. I think most of the people in the cycle camp are going to be bearish this coming year, and I won't be in that camp. Why? Let me show you. I think that what we're going to have for 2025 is what I call a Clint Eastwood market. There's going to be good, there's going to be bad, and there's going to be some ugly. This is not going to be an easy market at all. Why? Well, first, let's look at the good, because there is good here coming up in 2025. First of all, there's no recession in sight. Employment has been pretty good, though the employment figures started to bounce around a little bit. So I want to watch out real carefully the first 2 months of 2025. We need to see a pickup of employment. Now, those of you who subscribe to my stock letter at stockcharts.com know we had a forecast that there would be a little uptick in unemployment and a little uptick in inflation. That's what we're seeing now. But remember, go back and read those letters. That we're going to see that turn back to the downside. So it should get better after the first couple of months of 2025. But that employment is really important to the stock market. So pay a lot of attention to this one. Cycles, as I'm going to show you in a moment, I think they're pretty bullish for this coming year. And of course, we have a president. This is his first term in office. And it doesn't matter who the dirty dog is in office. Typically, the president's first year in office has been good for stock prices. So that's the good. Business is good. Here we see general business conditions from the Federal Reserve System. Wow, we're way up here. So business conditions have been good. They haven't been down here like we saw in 2016 or 2008. Business has not been bad, and that's good for Wall Street. People have jobs. Now, typically, we can see the recessions are in gray here. When we see a big decline in people having jobs, we start to get into recession. Well, we've been seeing that decline primarily because of the huge increase that we saw after the COVID epidemic. But now this is maybe starting to turn up. Again, this is when we really have to watch carefully here this coming year. How do jobs handle? We need to see a pickup to make certain that we don't get into the real ugly part in the stock market. One of the best indicators of recessions is a smooth U.S. recession probabilities. It's available for free on the Federal Reserve site. And we'll have to way down here. We're not even close to the area of where we've usually seen recessions. So that's positive. Now, an interesting point, though, recessions usually happen after the stock market tops, and recessions end after the stock market bottoms. I don't think I found a simple example of when the stock market did not bottom before the recession was over. In other words, stocks lead the recession most of the time. So just think about that. Stocks have been really strong, which would suggest that we're not close to a recession as well. Another good thought. Well, the bad, here comes the bad. Hold on now. 2024 has been a really strong market. So guess what? A lot of people have a lot of profits. What are you doing to take profits? Most people sell. So we've seen some selling, pretty serious selling coming here the last few days, the next to last week in December. Those sellers are out there. Also, I think a really big issue, what is Donald Trump's tariffs going to do? I happen to have some real background in this I'll be sharing with you in a moment. And how willing or unwilling is the Federal Reserve System to step in and do something to help the market? What's this new Congress going to do? Is Elon Musk going to really cut back everything? And if he does, what will that do? So there's a lot of bad out there. So The S&P and NASDAQ are up close to 30% this year. So there's a lot of people with a lot of profits, and you're going to see some selling probably right around the first part of January. Maybe that's what we started to see the last few days here. People are taking profits. Usually they want to postpone until the following year. So we may see a washover of that a little bit into the first part of 2025. So keep that in mind. Strong markets, great sellers. Trade wars. Look, I love this cartoon. Trade wars are easy to win. That's what Donald Trump's going to do this coming year. Oh, hand me another tariff. We really need to understand tariffs this year if we're going to understand the fundamental economics of the stock market. So let's look at this. I love this quote. I'm in favor of a high protective tariff. These are my sentiments and political principles. Donald Trump? No. Abraham Lincoln. So there's been a long history of tariffs, starting with Alexander Hamilton, who began his career right here where I live in St. Croix in the beautiful U.S. Virgin Islands. Alexander Hamilton went from here to be Secretary of Treasury and insisted on having high protective tariffs. Abraham Lincoln just followed suit with that. So we're going to see tariffs here. Let's take a little deeper dive into what that might mean. So here's an example to understand if the Donald puts a tariff on shoes from Mexico, well, the retailer buying those shoes has a decision. He's either going to pay the tariff or he's going to find a new supplier with a better price. Well, what would you do if you were the shoe salesman? You'd probably look for a new supplier with a better price. Now, that can come from another country that we don't have tariffs with, or Hamilton's idea was, no, we'll build it here. So American factories can produce these similar items and they can be competitive with that tariff price. Let's say a pair of shoes from China is $1, the tariff is $9, so the shoes sell for $10. Well, we can probably make that shoe in America for $10. So we're now equal with the Chinese pricing. So that can actually create a lot of economic growth, jobs, which is so critical to the stock market. So there's a possibility that tariffs can work well. During the 2018-19 China trade war, we had 50% tariffs on some things. So I don't know quite where this is going to go, but I do know this. There are really two types of tariffs. There are on outputs. That's something like a television set coming into America. You could put a high tariff on that because then we can make television sets here that would be competitively priced to the high tariff TV. Or there's inputs, items that we can make things with. So you ship transistors into America, whatever, but we're going to make radios out of that, or chips. So we can make something with that. That item may not have a high tariff because we're using it to produce something. So you look at tariffs really as a finished product, or is it something that can be used to go into production? And I think if Donald Trump does this correctly, we're going to see tariffs on outputs, finished products, versus the input items. That's what I'm going to be watching. I don't know Donald Trump. I've never met him. I don't know what he's going to do. And I know what I need to watch. That's what I need to watch. The China trade war experience is interesting. We have some data on that. One report, Liberty Street Economics, find that a fall in firm stocks prices on tariff announcement days is associated with significant decline in firm performance. So get ready for shocks. This is the good, the bad, and the ugly, right? When we see news announcements on tariffs, expect the companies involved to have substantial short-term dips in the marketplace. You can prepare for that. But does it really matter? This is kind of an interesting chart. Here's Joe Biden's stock market. Here's Donald Trump's stock market. Here's Barack Obama's, George Bush. But you know what? The market rallies. The long-term trend of the market is to the upside. So sure, these things do cause violent swings in the marketplace, but the overall move in the market tends to have a bullish bias to it. So we do need to keep that in mind. Industry is not at full capacity yet, so that's a problem. Industrial production is coming down in here. That's not necessarily positive for the markets. This is another one of those things that's, could be a lot better than this. Would like to see a market like we saw in 2009 to 2019-20, where an industry was at full capacity. Well, we're not seeing that. Now, the side of that, of course, is that they could get to capacity, but will they? We're going to enter something like we did in 1980, where for almost 5 years we were not fully utilized. So We have to watch this one carefully, but it's certainly not in a healthy position. You can see industrial production, what are we producing, is also coming way down. Now, this is one you want to watch quite carefully. It's a Federal Reserve industrial production total index, because we need to see a pickup here. If this starts to roll over and come down, we're going to see trouble in the stock market. This is one you can monitor on a monthly basis at the Federal Reserve site. So watch this one carefully, because we'd love to see a breakout to the upside, right? That would be really positive. We may not get that. A breakout to the downside would be negative. So this is an indicator you can watch and pay attention to. Money supply drives everything in the world. We saw a massive increase in money supply in COVID. We saw at the low in 2008. Well, we've seen a large increase in money supply. Look at that, how money supply has come up. This, of course, is the annualized rate of change of money supply. So this, some people think, causes inflation. So we have to be a little careful about that. We've seen a big increase in money supply here. The ugly, this is the ugly part of it, and it is not pretty. So make certain you pay attention to this. The Shiller CAPE ratio, the Dow Jones PE ratio, and the yield on stocks are all ugly, ugly, ugly. Oh my gosh. Let me show you. Over the last 6 years, the average PE ratio of the Dow has been about, I'll call it 21%. It's currently almost 40%. It's 54% higher than the average. So the current PE ratio is really high, and there's a great correlation with low PEs and massive stock market rallies. The other side of that coin, high PEs, market declines, or markets don't go anyplace very quickly. I'm going to give you some more data on this. This is the Shiller. Professor Shiller's CAPE ratio is now 38.5. Well, when the CAPE ratio was above 26.4, the real return in the following 10 years is only 0.9%. Well, we're way above that now, right? So we have some problems here. Let me show you going all the way back to 1880s. Here's the CAPE ratio in black, the Dow Jones Industrial Average in red. And we see when it gets high, we start bear markets. There's the 1929, and we see in the 1938, 36 bear market began. This is in black, of course, is the ratio, kind of like the PE ratio. Here it is again. We see it. There was a 1936, I think that was bear market. It got high again in the 60s, and look what happened. It went down. If you don't want to see this index high, here into the 1990s, now this is where it catches people off guard. It's really high, really negative, but markets continued rallying. Eventually, though, they did correct. And they continued staying high, and eventually they correct. And we're currently very high in it. And you can see that, again, the Dow is in red, and the CAPE ratio is in black. We're at a really high reading in this. So we do have problems that suggest, well, what does it suggest? Let's let the numbers tell us what it suggests. Remember, the ratio is now 38.5. When the starting CAPE ratio at the first of the year was 8.6 to low 9 as its high, the average performance the next year was 10%. But the higher that ratio gets to 33 or 44, about where we are now, the next year average return was only 0.9%. And notice this is where the bear markets start. This is the ugly part of this coming year. The average, the worst return was 6%, 4%, 3%. As that CAPE ratio goes higher, look what happens to the worst performance. It gets substantially worse. So this is, now how do you correct out of this? A bear market or substantial increase in earnings. There's only two ways out of this situation. We are in a bind. We're in a box right now because of this high CAPE ratio. You only get out of it with a substantial increase in earnings or a bear market. I do think a bear market is coming, not yet, though. Okay, now I've used a lot of you have read my work know I've used a formula based on the Dow Jones PE ratio. The formula says we can expect the market to underperform in 2025 by almost 6%. On average, the Dow is up 10.4% a year. With the current PE ratio, it suggests 6% a year. So we're going to underperform the averages, which that tells me, and this is critical here, that yeah, we'll be in an uptrend in 2025, but it won't be one of those runaway, the horse that run out of the barn. You can never catch them. They're going to run, stop, start, up, down, back, forth. You want to sell the big rallies, buy the big breaks. This is going to be a trading range market with a bullish bias to the upside. Bullish bias, I think, is clear. That's going to be there. However, the fundamentals don't justify a runaway bull market. Now, this was just released today. This is a Livingston survey, which began in 1946. This is the oldest survey of forecasters. Now it's handled by the Federal Reserve Bank. They do it twice a year. They're projecting 1.9% annualized growth for the first half of 2025 and continuing into the second half. So this is kind of backs up what we see from the Dow Jones PE ratio or the Shiller's numbers, that we're going to have some growth this coming year, but 2.8, 3, 5%, most likely not. What does that mean for stock prices? Yeah, the companies are going to make money, but not hand over fist, which means we probably are not going to have that runaway bull market. So I'm going to go now from that contextual background of fundamentals to my cycle studies, because they're very specific and can give us some ideas of when we should be in or out of the market. My very long-term pattern, I showed this a year ago to you as well. This red line is about where we are now. You're going to see this in a moment. So let's go to the next chart. We have this time frame. This is going back to the 1845, where for a long time prices really went sideways and then down, long back and forth. Then the big bull market begins. Then we see in 1845, we really don't go anyplace. Then the bull market begins. Here we see in 1900, for a long time, we don't go anyplace, back, and then, whoa, then the big bull market begins, right? And then in 1966, when I started becoming really active in the market, long time back and forth, and whoa, then the bull market begins. And this is where we are now. We're at the start of this long back and forth, up and down, and the next major bull market starting back.
I'm going to stop it right here. You see this? This is exactly what I was thinking. So 2026, this is where I thought, the housing peak. So I'm going to have to play another video one of these days about the 18.6 year housing cycle. So I think housing prices will peak in 2026. I think the stock market will telegraph things are going to go bad in 2026 as well. So you'll see housing prices pump one last time in 2026. You'll see stock market start rolling over. You'll start seeing that. So to me, late 2025 into early 2026, if you're going to sell a house, sell your house, especially if you get a really good price in an urban area. Dump it. Get that cash, put it in the bonds or something else. I don't know if it's gold and silver will be the way to go at that point. We'll have to wait and determine it. I don't think so, though. I think by that time it's too late for gold and silver. The gold and silver will roll over by that, well before that time. But yeah, dumping the bonds. Yeah, but you never know. We could have a regime change. I mean, the dollar could be in an issue in a total different scenario, and gold and silver might still be doing quite well. But yes, watch for 2026, and it looks like this sideways to bear market is gonna go into 2040. Yeah, if this is right. I don't know. I think something big will happen in 2030, around 2030. That's probably where the big problem will happen. And I don't know if it's going to be Taiwan or something like that, but yeah, watch out.
2038. Oh, we're going to have some big rallies there for sure, but more of this type of a market, or this type of a market, or this type of a market than where we just run straight up to the upside. That's my long-term expectation. That's how I see it. So the very long-term view, though, if I really blow this up, says that we continue going into 2025. This long-term cycle, which is peak out here, turn the corner, come up. It suggests that we're not going to see the end of this in 2025. That's good news. A lot of people have read my books and know that usually years ending in 5 rally. So there's a bullish bias there as well. I will cover that in my annual forecast report. It's not necessarily always true. As a general idea, here you are, as a general roadmap for 2025. We're going to see some selling pressures first of the year and generally up and down market. But that market, as I mentioned, I believe will be higher this coming year. Now, my 2025 annual forecast report will be released December 31st, where I get really specific, all major stock markets of the world, all major futures of the world, metals, bonds, currencies, softs, grains, and 30, maybe even more of the most actively traded stocks. And yes, Bitcoin will be doing Bitcoin too. In fact, I'm going to show you a Bitcoin chart in just a moment and some stock market forecasts as well. So just remember, you want to see the 2025 forecast report, go to ireallytrade.com and sign up there. Okay, now let's look at a shorter term view of the market. This is going back to 1998, lows, 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 general pattern, the market, low period, low period, low period 2012, 2014. There, generally speaking, look where we are at the first of 2025. General path starts to get bullish, and maybe the second, third month of 2025. Specific timing tool? No. Good general timing tool? Oh, yeah, one of the best, huh? Yeah. Very short-term cycles say we come down right here, right now, into just about the end of the year. This is a daily chart here of the NASDAQ, by the way.
Yeah, you see this one? Like the next cycle up only goes up to January 10th, right into the unemployment data. So I don't know if that's coincidence, but watch out. Watch out for the first full week of January. I'm going to be paying attention.
And it also suggests, and look how those lows come pretty consistently here. We're coming into the area. I know a lot of people got really scared by the decline in the last couple of days, but we can see a rally forming off this into the first part of the year. Some selling will come in, as we talked about. Profit-taking selling might be substantial, might stop some of the rally, but we're coming into a short-term reversal point back to the upside in stock prices. Big question after politics. Is America cracking? What's really going on with America? Oh, I love this chart. This is America's richest and poorest states. Our richest states are Washington, D.C., New York, Massachusetts. The average income is, what, $259,000 in Washington? All the D.C. lobbyists, I guess. I would be careful of the real estate market, too, this coming year. That's covered in my annual report as well. New York, $110,000. U.S. average, $81,000. The third poorest state is Arkansas, Virginia. The second poorest state, our poorest, is $51,000. But look at that. Those people in Mississippi are making more money than UK, France, Italy, or Japan. Certainly America is not falling apart. Average Canadians, about $55,000, Germany, $52,000. Our second poorest state does better than those other countries. So, I see a lot of people didn't like Donald Trump. They moved out of America. Oh, yeah, well, this is where they're moving. So, no, America hasn't cracked. It hasn't fallen apart. The future of America, as Ronald Reagan said, is still in front of us. I want to talk now specifically about AI stocks. They've been really hot. Is a bloom off the bush of AI? Is this one of these bubbles that's all over? Let's look. What can we see about the future? Well, I think I found some new things we can see this year. This is the ETF for AI stocks, BOTC bots, right? And I found something really interesting. I can determine, notice that blue line, when we have a high probability of the market rallying. Starting in mid-February, there's an 85% that this market will rally. This is a forecast we can make. Also, late September, we have an 85% probability of the ETFs for the AI or AI stocks in general to run. In the meantime, we have the red cycle forecast of what this market should be doing. So we can really say, yeah, this is really when you want to get interested in the market. Let's look at Caterpillar. We have a 75% chance Caterpillar will rally during the blue line, which tells us about the first part of July, we want to start looking. In the meantime, we know this is the cycle forecast for Caterpillar, but this comes the sweet spot for Caterpillar. IBM, we have a 75% opportunity for a rally. In other words, 75% of the time. And this blue line is not a seasonal, it's a cycle, combination of cycles. Gets really positive again in August. In the meantime, we have a pretty good idea of a bottom here, a peak here, a bottom there. That's what we can now see for the future. So it really expands our view of the future. Bitcoin itself, well, let's take a look at that. Here's Starting in June, we have an 84% opportunity for a rally. That's going to be your sweet spot in Bitcoin. For GBTC, at least, this is one individual coin, right? Ground trust. And in the meantime, we see down, up, down, cyclical low, cyclical high, cyclical low.
So this one, yep, that's why I assume something's going to happen in January. I think, yeah, Bitcoin's going down again. And I think the best time to get back is around May for that move into July. So this lines up with what I'm seeing as well.
That's what we can now see in the 2025 forecast. I've taken my work that far, which really helps us figure out, isolate when we want to really get bullish or bearish. Well, there again, you can go to ireallytrade.com to register for it. I hope you've learned a lot today, that you do have a view of the future. You know what to look at in terms of what's important in the marketplace. The fundamental data that I shared with you might want to go back over and look at that as well. But I think we're going to have a decent year in 2025. Runaway bull market, no. Opportunistically upside, yes. The crash that everybody's been talking about for, 10, 15 years, these guys have been talking about a crash every year. No, it's going to be a tough market, but the bias will be to the upside. So this is Larry Williams, wishing you and all my friends at stockcharts.com and stockchart.com users for 2025, good luck and good trading.
All right. Yeah, Larry Williams is one of the few of the old guard traders. He won competitions in trading. He probably got like 5,000% within a year, something like that. So, yeah, you can look him up, Larry Williams. Yeah, he grew up in Montana, did this shit, did his trades. Now he's just chilling in the Caribbean. Yeah, that's the life. That's where you want to aim for. All right. And I would say, a lot of people can't get super rich with this stuff, trading, unless you get a hedge fund going, like Stanley Druckenmiller or Paul Tudor Jones. Like they're basically using other people's money and trading with that, and that's a whole nother game. I personally could not do that. So I'll just trade my own stuff, but I'm pretty conservative. I try to be, and I think you just make a living out of it. You're not going to be super rich, but at least you don't need to worry about having to work again or something like that. So it depends on your time of life, Just keep working if you're young, but always keep in the back of your mind, if you can do this pretty sufficiently with trades, you can realize very quickly that, hey, I'll try to do as much as I can, but I can retire early, and that's what you can do, right? And that's about it. But if you have a family or kids, it's going to be a lot harder. Especially now with the inflation, so you're going to have to get really good at trading, and that's sort of why I'm doing this stuff now. You couldn't really be a sloppy trader like I am. Like I'm still a very sloppy trader. I don't try to be so accurate. I just need to be good enough. But with the stuff I'm teaching you now, at least all the stuff that I know. And then when you want to do some advanced stuff, you know where to look. Because very few people will incorporate the charts, the cycles, and then the multi-time frame stuff too. Yeah, we have to go over more of that over time, and the scanning, and they won't incorporate everything together. You got to incorporate all the recipes, and then from there, you have a really good overview of what you need to target, and then you can move on to more specific areas like options trading, like maybe futures trading. Futures trading, definitely somewhere to look at. But for the most part, you can try to be an investor type and try to make money that way. So all this stuff is applicable to everything, and that's why you have to know the higher level stuff. What did I discuss last time? I think I discussed something, didn't I? Yeah, Max Payne, right? And how many people know that? Probably still very little, which is bizarre. I think Max Payne probably is like one of the most important things to study with the way options market controls the whole stock market. And then something before that, I was talking about like the Baltic Dry Index. How many people know that? Like you can look at like how shipping routes across the world, you can detect if there's going to be a recession. I talked about that maybe a week ago. So there's a lot of things out there to to know in your toolbox, you know, besides like common knowledge. And just having a little bit of that gives you a slight edge over most people. So this is gonna be like 2 hours. Like, yeah, we're already over midnight on the East Coast. It's just 9 something for my time. Yeah, I already ate though, so I don't need to worry about that. But okay, let's see what Bitcoin's doing. Oh, still having trouble, huh? Still having trouble at that area. Damn. See that? That 96,300 area? Man. Every time it always like comes back to it like a magnet. So that's when I saw last week on Monday, I should have shorted Bitcoin through MSTR. That would have been so easy. Once you just fell through here, and then like when Jerome Powell opened his dang mouth and it cut through 103, which was the previous major high, 103,000. It's like, yeah, you're going back at least to 95K. Yep. And now we're just hanging around back there. Oh, goofing off, wasting time. Don't know what's gonna happen this week. Maybe I'll get a quick trade again. But yeah, the easy money's already been made, right? Oh, I was talking about Archer too. Man, this thing's crazy. So ACHR, man, $7 to $10. Man, $7 to $10, back to 7, back to 10. Like, what is it doing? This is nuts. There's so many fun stocks to trade, I guess, for people. So if you guys, yeah, you're more active than me, yeah, look at all the stuff that's scrolling on your screen. That's why I put it there. I put it there for a reason. There's a lot, and there's a lot more that I haven't even said. Like IONQ, Mark Scully's trying to short this thing. Look at it. Made a new high last week. Didn't give a crap. I don't give a crap. Yeah, I didn't give a crap. Oh, okay, Jerome Powell crashed 10%. Don't give a fuck. Look at that. Now it's up 20% Friday. What the heck did it care? Crazy. Crazy. These things are crazy. I think another one I like is BTDR, BitDR technology. So this is a Bitcoin miner. This is one of my favorites to play too. Perfect. Perfect. On a daily 18, bounced right off of it. I don't know if Bitcoin's gonna make it though. We're gonna have to see. See how the Nasdaq's doing. Nasdaq, yeah, Nasdaq future is still doing good. I see SMCI is up like about 3% overnight on Robinhood. So gonna see if I'll buy some more SMCI on Monday. So, and if your leverage, use SMCX. SMCX is 2x leverage. So SMCX, okay? Yeah, use this one. So buy it around 42 and see if it goes to 60, 70, 80, 90, and 100 into New Year's. If you're lucky, we'll see. That'll be a good trade. But MSTX, yeah, that's another one that I'm gonna be playing. So I'm not gonna be doing too much stuff. Oh yeah, and cold. So if you go back to the beginning of this stream, yeah, I talked about coal is another one I might play this week. Yeah, we'll see if natural gas pulls back. Right now, it looks too strong. I don't know. I don't see any reason to short it right now, but I'm expecting something bad to happen sometime into maybe after Christmas or something, and watch it. So watch it. If you see this thing crash through, so natural gas, so you look at the natural gas futures, you use NG. Yeah, just pay attention. If it goes through here, like right through here, just slices right through here. It's just like, oh shoot, short. Like, so you use like KOLD if you want. If you're playing futures, just short it with the futures, Okay. All right, guys, that's about it. A few trades today to talk about into this week, but I'm not really gonna be aggressive. I told you I was done first week of December. I got my SMCI trade. That was a beautiful trade. I had some shorts on MSTR, closed those out, didn't care. You're just being greedy. You're just being greedy now. But like I said, since nobody's trading in the vacation times, you might get some real nice moves real fast. And GameStop, who knows? Maybe GameStop will go up like 20% for no good reason because nobody's trading. If nobody's trading, it's easy to manipulate the price. So, yeah, pay attention. You might get some quick money. You can trade in your airport while you're waiting at the airport. If you're waiting at the airport, just go trade. Or if you're taking a Greyhound, might as well trade. Does Greyhound have Wi-Fi? I don't know. Anyhow, all right, guys. I'll see you guys later.
Feel like I should, feel like I should, feel like I should, feel like I should go. Go. Feel like I should go. Feel like I should, feel like I should, feel like I should, feel like I should go.